Welcome to JDMBI.com. This is Jonas Reports for the 6th of May. Well, we saw Friday. Once we got up to the 38% here, Magenta clearly had taken the lead back before when we had reached the 23% and it supported enough. The continued decline of DOC orange below the red, which is what we were looking for, was the catalyst that really propelled things above 50%. So there's no reason, and of course, this coincided with new fund money coming in at the beginning of the month. So all of that in line, shakeout continuing to rise, creating that second pivot, and this is what we were talking about too from the red, a P2 pivot here, higher red DOC, kind of within the no spark zone, which tends to be more muted from a push standpoint, but certainly more than enough to keep things moving from a market standpoint. And nothing relevant other than the Fed pretty much saying that they are going to, continue to ease as they can, which I think is more job loaning than anything, because really they're just worried about treasuries increasing to a point where it becomes difficult to sustain bank situation, given the fact that many of them are still holding on to significant losses. Some of the big ones obviously have lightened their load and been able to redo it, but we've already seen a couple of banks failing recently and trying to keep that on the DL, the down low, so that it isn't too known. But there is that credit risk, and certainly you don't have inflation. Of course, that's where everyone's going to be watching oil from an NQ standpoint. Even stronger from its DOC reading there, and similar from a S&P standpoint. So everything's looking pretty congruent, much stronger from a shakeout standpoint for the NQ, and that was a pretty strong move, well above 50%. So should be no difficulty for them holding that setup, though after a pretty significant move, you might see some pullback within it, but minor. And you can see Treasury yields dropping again. So, this is everything the market needs to propel forward, because, again, why would you be in Treasuries when it gets to be a strange question. It's like, how are they going to sell the debt at these levels? Because who would buy it other than the Fed itself? Because not worth it. From a broader standpoint, the collapse in oil has been critical, because this will ease future going into fall period inflation rate. The fact that we already had the increase is already going to be built in for the early part of summer, but this definitely helps. And as long as it can stay muted, particularly if they can get it below the 70 marker, would be a significant improvement going in towards the end of the year. And that really plays a key factor for the Fed. If they really are trying to ease, they're going to have to get the oil situation at a reasonable level. The bigger issue is, though, does it reflect a slowing of economic growth? And that really becomes the critical element that we start to look for as we see employment tick up, as far as unemployment, and whether or not that's going to accelerate given the higher interest rates. And of course, you have changes like in California, the accelerated minimum wage up to $20 an hour and stuff. Some of these artificial things you do have unintended consequences, and usually that leads to layoffs. And that's been a net positive for the euro, because the cheaper oil means less euros have to be converted, and that becomes an obvious bonus right there. But it's also going to lead to increase for commodities. That's going to be the next play for everyone, because that's your safety net. The commodities are a physical thing that everyone needs, and particularly gold is the strongest player within that, and you would expect that to continue. You would also expect cryptos to continue to move higher. They've had a nice fill back in right after the halving for Bitcoin, and now that supply limitation, because you have fewer rewards for miners, so there's less action. That creates a supply disruption, so that creates a nice little bonus move for them back above 50 strong with the DOC magenta there, and that should push things back up towards their highs as well. Similar effect for ETH, though lagging, and that's probably going to be the case since they're having difficulties with getting ETF approval. From our 50K standpoint, we could see it from the beginning when we ended up with the buy configuration that took place just above the 23% and grew stronger with that MBI magenta taking the lead, and even when it started to fall below, there was really no short activity, and you had a complete reset within the DOC steel here. So that was always coming from below. And as long as it stayed above the negative 13.5, continuation is built into that configuration. So you get a little bit of retrace softness, and then it starts back up again. That's the second phase. And well, pretty clean action overall, relatively speaking. From an intraday standpoint, you see the Fed talk, it filled back in a good portion of that. So that's pretty healthy. That took out more than 50% of that move, and then rebuilt again from there and continued all the way across to finish at the highs. So that was pretty clean in here in the post market to start the week. Pretty clean, just back and forth a little bit for now. And so you get a little bit of softness, but I think that will start to pick up as the regular session begins. And, again, there are a lot of problems and all these things are systemic, but at the end of the day, what alternative do you have other than being in the market actively at this particular stage? Because you're not going to get yield anywhere else unless you're just playing a strict commodity, and nobody does that as an exclusive. So that just creates a de facto floor for the market, and the Fed is feeding into that at this particular stage. So all in all, that's the long and the short of it for now. As always, anything relevant, I'll put it on the Skype chat. Have a good one. Trade well.